Okay, let's talk briefly about one of the most important things that affect all of our lives, and that is oil. Since the beginning of the financial crisis, there's been a glut of oil supply in the worldwide inventory. In my previous discussions on oil prices, I've stated that higher oil prices have been driven mainly due to a decreasing US dollar. Here's an update on that stance and why I think that soon oil prices will also be driven by fundamentals. Oil prices have escalated 150% since their December 2008 lows, but inventory remains at our historically high levels. My subscribers are all aware of this, as it is not new information. However, the fundamentals for oil over the next few years look excellent, and high prices will not only be driven by a weak US dollar, but also by market fundamentals of less supply. Here's what's happening. In a report prepared by Goldman Sachs, oil production from 230 of the world's largest oil projects will decline in the next 2 years. Overall, reaching a peak this year, oil production will decline for the next several years. The decline rates quadruple collectively until 2012. Non-OPEC production is expected to fall by 2.5 million barrels per day. Only Canada, Russia, and Brazil will see production growth. Peak oil is already happening, and the main reason why oil prices will remain very high over the long term. Meanwhile, we will continue to see declining production rates from some of the world's top mature fields. Mexico's Cantarell field, which is responsible for 40% of the Mexican government budget, produced 30% less oil in 2008 than it did in 2007, and eventually will run dry within a decade. Norway, the world's 11th largest producer of oil in 2008, saw its production peak in 2001 and is now down 27% since that time. Of course, Venezuela, through mismanagement by its ruthless leader, has seen annual decline rates of more than 25% in certain fields. For the last 6 years, I've been bullish on oil, and I remain so. The portfolios of serious investors should hold for the long term stocks in some large oil companies that do not have depleting fields and are sourcing new inventory and discoveries.